Each one of them, to a person, realized there was something wrong with the government awarding them money in their bank accounts to stay home because of the recent COVID crisis. Leads to questions like, well, if the government can just award us money, why do people have to work and why do we have to pay taxes, right? I'll leave it there and let the other guys expand, but it's quite simple when it comes down to it. Morally, or not morally, they just believe they can see the problem. And then there's a famous quote, I'm sure Larry will be able to tell me who said it, but if printing money led to prosperity, if we could print ourselves to prosperity, why is there still so much poverty in the world? People understand that.
Bitcoin's mining difficulty has hit a new all-time high despite the digital asset's less than stellar price performance of late. Mining difficulty refers to how competitive it is to mine Bitcoin. The difficulty rises as more mining units get deployed, and thus suggests that the activity continues to be a profitable and popular enterprise. According to data from CoinWars, Bitcoin's mining difficulty is 55.62 trillion hashes. The network's last notable peak was 53.9 trillion hashes on July 17 this year. The deployment is an arms race. Everyone is putting as much as possible online before the halving. You can see this with Hut 8, Cannon, and Riot. Co-founder of mining firm LSJ Scott Norris told Decrypt. We're also seeing Antpool and other Chinese firms growing hash rate at a pace we haven't seen in over a year. Whatspinner has shipped their latest generation machines already and their hash abilities are growing substantially. Despite the milestone, markets currently tell a different story. Investor sentiment towards Bitcoin turned bearish last week after Chinese property giant Evergrande filed for Chapter 15 bankruptcy in a Manhattan court, pushing some investors to dump their more speculative assets. In this video, Greg Foss talks in detail about Bitcoin and the fiat Ponzi. He also addresses Bitcoin as a digital energy, and while money is energy in some sense, the Fed can print it whenever they want, which makes energy monopolized and unequally distributed. Let's now get into the video. Also, don't forget to like this video, subscribe, and drop your comments below.
The interest expense on the debt burden that's been accumulated already is going to exceed the ability of the economy, which is your tax base, to keep pace with your interest expense. That assumes that governments become fiscally responsible and don't accumulate any more annual deficits. It's mathematical certainty, 100% certain that fiats will continue to debase. And there's very few things in finance that are 100% certain. So when you know something with 100% certainty, you better act on it. And if you don't act on it, you're a fool. And there's lots of fools in legacy finance because they don't want to believe the mathematics, but it's pretty simple math. So I'm spiritual. I'm not that religious. I really think, though, there's a link between Bitcoin and spirituality, religion. I'm very honored to be here. And he came up with a strategy that I thought was quite remarkable, even in my business, trying to convince investment policy committees to take exposure to Bitcoin. He said he convinced his investment policy committee to make an allocation to Bitcoin. Let's pick a number, 6%. I think that's the number he used. They decided they were going to invest 3% immediately and hodl for 4 years. And the other 3% they were going to rebalance. Meaning, if the price of Bitcoin went up, they would sell it down in their portfolio and keep it at 3%. But if the price of Bitcoin went down, that 3% would get built up at a lower price. And that's actually quite remarkable because it's worked in a down market for Bitcoin. They did start investing, unfortunately, near the top. But now their average cost on the 3% that they can rebalance has come down towards right near current market prices because they were able to buy some lower. And I thought that was a remarkably smart policy decision on behalf of a nonprofit that I haven't even seen in the real world of Bitcoin allocation. Now, a 6% allocation, let's be very clear, people, is very large for just about any institution, profit or nonprofit, pension plan or the like. I don't think it's irresponsible, but I do understand that it's very large. And his ability, if it was 6% and you did 3 plus 3, or if it's 4%, 2 plus 2, you get it. If it's 1%, 50 basis points plus 50 basis points. Very smart investment policy decision. And this is from a young man who didn't do that on a professional basis. I'm like, wow, think outside the box. This type of allocation policy works for everybody. So congrats, hats off. He's also working for another nonprofit or another investment organization that's also going to embrace Bitcoin. Education is key. Bill Miller, who is going to be speaking, or Bill Miller Sr., his son is going to be speaking at Bitcoin conference down the road, has a great expression. He goes, volatility is the price of return. You guys know that a price that goes from your top left to your bottom right in a straight line has no volatility. You understand that, right? It's not going up and down. It's absolutely moving in the first derivative, straight down. And your investment policy guys would define that as there's no volatility, therefore there's no risk. Oh, no risk? It's gone from $10 down to $1 with no volatility. These guys are geniuses on Wall Street. They're not. They're thinking inside these silly little boxes. And we have to educate them how to think outside that box. Because yes, Bitcoin is volatile, but again, in the words of Bill Miller Sr., that is the price of return. Show me something with no volatility, and assuming it doesn't go like this, but no volatility, chances are it has no return as well. You don't get things for free in this world, people. Very few things, actually, unless the government gives it to you.
Another metric that climbed recently, and that is also always climbing every year, is hash rate. The hash rate measures the computing power of the Bitcoin network. The higher the hash rate is, the more attempts or hashes Bitcoin miners can make within a second to break the code, a clear indicator of the network's computational power. Today, Bitcoin is making 446 quintillion code-breaking attempts every second. That's high, but not quite as high as earlier this month when the network was making almost 486 quintillion attempts every second. Greg Foss now expands on the relative percentage of risk and allocation that can be given to Bitcoin to ensure the security of assets and returns as well. Let us now listen to what Greg has to say.
When you start studying engineering or thermodynamics, the first law of thermodynamics is the law of conservation of energy. Energy can neither be created nor destroyed. And I like to think of Bitcoin as digital energy, proof of work energy. It's something that resonates with me. And so the law of conservation of energy is near and dear to my heart. And I think of Bitcoin and the digital energy paradigm as the United States as global reserve currency and the ability to print currency. They actually have the ability to print energy, right? The United States petrodollar, the United States has the ability to print energy, which is a huge competitive advantage, but not altogether egalitarian. So Bitcoin fixes that. And Bitcoin proof of work, not proof of stake, Bitcoin proof of work resonates with me as an engineer. And I think that's sometimes why there are engineers that seem to, grasp it quite quickly. Even if it is 6% allocation, please focus on the other 94% in your portfolio. That's where the real risk is. Yeah. Bitcoin is your insurance. You don't buy and sell your insurance. You don't try and trade insurance, fire insurance on your house. You accept it, and it's there to protect you. Focus on the other 94% of your portfolio. I always play probabilities. That's how you manage risk, okay? So there is a possibility, but it's not likely, okay? That being said, I'm an optimist, and I'd like to do everything I can so that there is an orderly transition. I love the United States. So you guys may not know, did I tell you I'm from Canada? Yeah, I did tell you I'm from Canada. Look, I love the United States. Like, Canada's a rounding error. I need you guys to survive, okay? I really do. I need you guys to survive for the benefit of my children. And you guys are, I'm gonna say it, you're effing it up, okay? So you gotta get back in order. I need you guys to understand that there is a way for America to remain the bastion of freedom and the bastion of where everybody in the world, this shining light where everybody wants to live. I mean, please do it, and Bitcoin is the answer. So that's my optimistic outcome.
In its latest blockchain letter released on August 22, executives at the crypto asset manager doubled down on their bullish Bitcoin price forecasts for 2024 and beyond. Bitcoin price performance depends heavily on halving cycles, Pantera Capital argues, and with the next due within the coming 12 months, the firm is betting that historical trends will continue. Bitcoin/USD notes tends to put in a cycle bottom and top roughly equal lengths of time from each block subsidy halving, which cuts the number of Bitcoin paid to miners per block by 50%. Bitcoin has historically bottomed 477 days before the halving, climbed leading into it, and then exploded to the upside afterward, it wrote. The post-halving rallies have averaged 480 days, from the halving to the peak of that next bull cycle. That same theory suggests that the 2022 bear market bottom marked the current Bitcoin price cycle bottom. If history were to repeat itself, the price of Bitcoin should have troughed December 30, 2022, Pantera continued. Looking forward, by the halving date in April 2024, Bitcoin/USD could be trading at around $35,000, something that it is still on track to accomplish. However, what happens in the 480 days afterward involves not only a new all-time high, but much more. The 2016 halving decreased the supply of new Bitcoins by only 1/3 as much as the first. Interestingly, it had exactly 1/3 of the price impact. The 2020 halving reduced the supply of new Bitcoins by 43% relative to the previous halving. It had a 23% as big an impact on price, Pantera stated. The next halving is expected to occur on April 20, 2024. Since most Bitcoins are now in circulation, each halving will be almost exactly half as big a reduction in new supply. If history were to repeat itself, the next halving would see Bitcoin rising to $35,000 before the halving and $148,000 after. 480 days from an April 2024 halving makes Bitcoin scheduled to hit its next all-time high by July 2025. Do you think July 2025 will be the D-Day we are all waiting for? Let us know your thoughts in the comment section below. Also, don't forget to like this video, subscribe, and turn on notifications. Thanks for watching.